The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray. Feeling good, Lewis. Let's take a look here at this German DAX. As you can see here, we have our good friend over across the pond is making an assumption that there could be a top up in this area. One of the things that he's looking at on this 4-hour chart is the head and shoulders pattern, and we do have one that is fulfilling between the 25th of January into the February 5th high, and then the high that we're making this morning here on the 13th. So that's going to be an interesting one to see if it see if it can do this. Now, what he's doing is, as you can see here, he is selling up against this 0.618 level at 11.95, and then he's only risking a very, very small amount above the about 50 points, right above the 78% level. So that's what he's looking at as he's doing that, and so that's why we're keeping an eye on it for you folks. The next thing we're going to look at today is the FTSE, and as you can see, the FTSE really is one that is, we'll bring this up here so you can take a quick look at it, and it's in the news all the time because of, oh dear, we're having a slight problem. Here we go. This is the daily chart. And as you can see here, we made the ABCD bottom down there, and then we had the ABCD Gartley right at the 61% retracement. That came in 2 days ago. We're testing it again right now. So this is a $64 question of whether it's going to go popping through or not. And believe me, they have enough news coming out of the UK about Britain and all this other stuff. I mean, they're playing as many games as we do over here. So that's another one that we want to take a look at. We've got a couple of news items here that we need to bring to your attention from folks here at the TFNN room. Particularly our good friend Mr. Z has found a very, very interesting pattern here in the Kansas City wheat, and I wanted to share that with you here because it goes right along with what our good friends at Anderson Capital Management, Rich Anderson, and also Cy Monley of Sylvius Financial out of Chicago. Both of those folks have been waiting for a long time to get involved in the wheat market. And if you look at this really closely, this is a really interesting pattern coming from Mr. Z. You'll see it's a butterfly pattern right on the low. Yeah, so it's this is a very, very low risk. Anything below $5 a bushel would probably be a little bit suspect, and that's where Mr. Z is putting his stop, I understand, at 495. But if you'll notice the bottom of that, you'll see those dotted lines. All I did was I just drew in this butterfly pattern to make it easier for us to see it. But if you look at those dotted lines, those are the cycle lines that are there from the low in September to the low in December and November, and then the low in November to where we are right now. There's a really nice cycle pattern in here. So not only do you have 1, 2, 3 numbers coming together at the same time down there at $5 a bushel, you also have some cycles that are coming in. So you've got a lot of things that make you really think that this has got a chance to go higher. And the other thing is it closed higher yesterday, which is actually a pretty good sign. Now, whether that's going to happen or not, we really don't know, but we're going to watch it really, really closely here, just to keep an eye on it for sure. And of course, Mr. Z will keep us alert as we look at these, as we go through watching these all the time. Now, we do have to cover something in the natural gas because it has been all over the map. And when I mean all over the map, I mean all over the map. Let's just take a look here at the natural gas. And it's a great trading one, folks. It really does. It trades well. There was a spot here in the middle of the night there around 1 o'clock in the morning where we had this big break. You'll notice it went from 262 all the way down to 255. That's about a $700 move. There probably was some bad fills during that time, but then it bounced and held that held that level. But the thing to look at is, you notice after that look at February 12th, folks. We had the big gap up on Sunday night. The market went up $2,000, came down $1,200, then rallied $1,000 up to the 61% retracement up there at the 270 level. After 270, it made the ABCD pattern all the way down to this level at the 257, and I believe we're trading around 259 right now. So this is a really wild one, but it's good to look at because it is tradable, and when you get a nice pattern, and you match it up with the ratios, you've got a good place for risk reward. And that's what we're looking at as we're looking at some of these this morning. We have a guest tomorrow. Will be Bill Meridian of Cycles Research. On Friday, we're going to have Tim Bost of Financial Cycles, and it's going to be interesting, both of those fellows, and especially Tim Bost, because if you remember, the last time Tim was on, he gave us this astro cycle that he was looking at, and you'll notice that number 5 up there, guess where number 5 is, folks? Number 5 is today, the 13th of February. So we're going to see if that's going to maybe move the market down 2 handles or something in the S&P. Very, very strong. Folks, yesterday when that market went above 27.18, it was really set to go higher, and it just blew out those ABCD patterns all the way through 27.43, 27.48. We got up to 27.58, and we'll see if there's going to be anything in the offing today for some type of a top, but how big of a top it's going to be, I'm not sure. One of the things that I mentioned in my newsletter was the strength that we had in the market coming off of that low on December 26th, how powerful it was, that it was really extremely powerful. And if you'll remember, I put up a chart from one of our friends, Mr. RK, showing that the stochastic was coming out of here faster than it had ever come before, I think in the last 10 or 15 years, I believe Randy said, and it was an alert that this market could go sharply higher, which I felt that it had the possibility, because if we got above that 27.38 level, there was very little resistance up there except for the 78% level at 28.05, which, that could be made anytime. But this is another one that Randy was kind enough to send us, because it really shows the relationship between these different markets. You can see the emerging markets in 2016, how it made those different bottoms. The emerging market had a higher bottom. The S&P had a lower bottom. You'll see in 2009, of course, that was the big low in March. Look at the higher low that we had in the emerging markets. And if you look really closely at that one, folks, the emerging markets in the lower left-hand quadrant there, that shows a perfect Gartley pattern right at the 78% level. And, of course, the bottom on the March in the S&P in March the 5th of 2009 was a butterfly pattern. So both of those, lined up pretty nicely. And then if you look at the 2018 low, you'll notice that we had that big sell-off into December 26th. And you'll notice, again, the emerging markets was making a double bottom and such. You'll see the one from 2004, same type of pattern. That's why we watch these international markets, folks. There's money everywhere. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart that we looked at on Monday. This was the February hogs that were going off the board that day. And I just wanted to bring to your attention the fact that that ABCD pattern that we were looking at, the longer one, was a basically a Gann type of time down equal time up. You'll notice from point A to point B was equal, point C to point D was equal, and with February hogs going off the board, you had to switch your operation either into June or into April, and each of those opened a slightly bit lower than it did on Friday on Monday, and immediately had a tremendous rally, about 4 cents a pound in hogs, which is a little over $1,600. So if you were able to get in that, and make sure that you put your stop at break even so you don't lose any money, because we don't know where it's going to go from that level, but at least it started in the right direction. Another one that we discussed, and the reason why I review these is because, you know, things change quickly, and you don't always get to do the things that you want to do by the time you come on the air here. You know, prices can change rather dramatically, especially in some of these futures markets where we're watching you know, them on a shorter time frame, like 30 minutes. To give you an example of that, if you hold on here, hold on 1 second here, we'll be back. Yes, we will have Tim Bost on Friday, and we'll answer that question about what that high is that he's looking at. But right now, we're going to look at this crude oil chart. This is a 30-minute, as you can see here. We were looking at this perfectly sloping downtrend channel that we've had since early February. We were expecting this to break out to the upside, and the reason for that was that we had been down, you know, 6 days in a row, which means the market was relatively oversold. Now, what I did was I put the Keltner channels. They're also called Bollinger Bands. John Bollinger devised a little tiny bit of a standard deviation difference than Charles Keltner did, but Keltner did this work, you know, way back in the 30s and 40s, and they're also called either Keltner Bands or Bollinger Bands. But what I wanted to point out is the breaking of that line. That's what was important, because if you'll notice here in the next chart, and what I've done here is I moved to an hourly chart. I've taken out any of the bands because I really don't use any bands or oscillator, folks. I just look at the patterns and try to find the ratios of what I'm looking at. Ruby, I will be happy to take a look at cotton the fluff for you just as soon as we finish here with this crude oil. I'll pull it up. Here's the crude oil. You notice we broke through that downtrend line. It hit it 1, 2, 3, 4 times. On the fourth time, it broke through with really a good thrust and volume. And now what it's done is after it did that, it pulled back to the 382 retracement. As you can see, that's at $53 a barrel. As long as we can stay above $53 a barrel, folks, the spot crude oil's got a chance here, to look at, something, pretty interesting. Now let's just take a moment here. Take a deep breath, Larry, and what we're going to do is we're going to come up here and take a look at cotton the fluff, and we're going to be bringing that up here in just a second. There's the old, where are you, cotton? I haven't put a cotton trade on in 49 years. Just figured it out today, and it looks like the old cotton the fluff looks like coffee the drink because they are heading into the drink. Hold on one second here, and we'll get this up here so we can look at it. Yes, we're breaking down here in the cotton. Let's get this up here so that we can share it with everybody so that you can take a look at it, and then we'll be looking at that. Hold on one second. Here, hold on. Wow, the little camera's not working. There we go. Okay, you can see here that the tip off here, Ruby, is from the end of January to where we are right now. You see we had a very, very minor rally, about 4 cents a pound, and now we're breaking down. We could be at a double bottom here at 70, but it's frankly, you've got a small ABCD in here, but there's so many other things that you can look at that would be easier to trade than cotton. So I wouldn't really, get involved with that too much. However, you really have to watch it, Ruby, and I'll tell you why by looking at the next chart. This is the long-term weekly chart going back over the last 4 years. Look at that 61% retracement, folks. We got a lot of support at $70 a pound in cotton. That's a 62% retracement of the low way back in February when we had that beautiful butterfly pattern that had formed. And so you really need to watch this one very, very closely at $70. That could be a double bottom from the low that we made in December, but that's all I see with that. I wouldn't get too excited until you make sure that $70 level holds, and that's what I would do. I just think the risk here is just a tad too much, given all the other things that we're looking at here this morning. So let's just keep that in mind. I hope that helps, but I certainly wouldn't do anything with it now. I'd want to make sure that cotton holds that 70 level. Folks, the reason why I don't trade cotton, cocoa, I trade sugar. Yes, I do trade sugar, but coffee, cotton, and cocoa, I don't trade. I was long those way back in 1973 or 74, and cotton was limit up. And I had, I don't remember how many contracts that I had, but I told Roy, I said, let's sell them and get out of them. And so they put the order in. It was trade limit bid, about 10 or 15 minutes. I mean, we had bunker Ramo boards, and they were flashing so much they were out most of the time. And we never got a fill back. When the fill came back, I got filled limit down. That was a $2,000 on each contract, and I was very upset. And Ivan Auer was on the other side from New York, and he said, do you want these blankety blank contracts or not? And Roy says, we'll take them. And I didn't want to take them, and boy, it was the smartest thing Roy did, because they didn't trade for a couple of days. They went down the limit. I didn't know anything. It's just that my timing was at the exact high. When you trade this many years, things like that are going to happen to you, and it left a bad taste in my mouth. And as my grandma told me once, if you ever have the urge to trade coffee, cocoa, or cotton, go lay down on the couch until that urge goes away, and I haven't done it yet. With all these currencies and stuff and indices that we have now to trade, you really don't need the soft, but some people are very good at it, Mr. Z being one, but I just stay away from it. I analyze them, but I don't trade them, and maybe analyzing makes it a lot easier than trading, actually. Now, the bonds are still moving a little bit lower, down to that 145.20 level. We've now dropped 1.5 handles from the high. I still think we're going to be going a lot lower than that, as we've been talking about for quite some time here. As a matter of fact, we ought to review the German bund, because it has also come under some pressure here. And as you yes, it does look lower, Bob. You're absolutely correct. Bob, by the way, congratulations on your gold trade. You bought it at, I believe, 11, and it went all the way up to 19. Good job. And so keep that in mind. Anyway, you can see this German bund trade. There's 2 ABCD patterns in there, and there's a 3-drive pattern. How much of a correction we're going to get, I don't know, but it should be at least what we got in early January. You see it dropped about 2 handles there, so that would take us down to probably the 165 level in that German bond. So that's what we're watching. Oh, break time already. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, bear with me here 1 second, and I'll be right with you. I have to do something here. We've had a big gap up in IBM, which means the Dow will be moving north, so we'll keep an eye on that one. All right, let's move on to something that I wanted to talk about, and that is about the history of people when they first start trading. This is especially true in commodities. 1983, I met Mark Douglas in Chicago. I'd been on the floor of the exchange there. We had mutual friends, and we became very close friends through the years. And one of the things that I was able to do is he was in the process of writing the book, The Disciplined Trader, and he had all of these, because he had worked for Merrill Lynch, he had all of these accounts, thousands of them in commodities, and Merrill Lynch actually paid him to find out, why these people lost. And so he would go over these statements of all of these different customers to see what they had done wrong. And, it was the usual things, not planning to trade, not having a stop, no money management, and not only that, but these new traders were always consistently losers. And the history behind all of those trades that Mark evaluated was the people that started after a year and then decided to drop out. That was about 80%, 85%, I believe, was a number. Only 15% of those first-time starters ever were profitable, so they dropped out. But the people that stayed with it 2, 3, and 4 years, they actually did pretty good. So that was a really interesting thing to watch. And then he also had access to the phone numbers of these folks, and he would randomly pick these folks and talk to them about what they had done, what they were doing, what they were looking at. And it was amazing the statistics that he had behind it. But it was really because, they had no idea what trading was about, that it was about the amount of money that you risked, not about the money that you made, and so you had to have some type of a plan for money management, otherwise you were doomed for failure. So when you start this, you should think about the money management. If you come in to trading and you say you have enough to do, let's say 30 trades, let's say you have a $15,000 account, and you're risking $300-400, that means you can do about 30 trades, and your odds of losing 30 trades in a row is quite high, but you have some profits in there that have to be pretty good, and that's where your profits need to be bigger than your losses. And one of the main reasons where people overtrade is when they're trading, too many times a day. And I think if you trade more than 10 times a day, 10 is really a big number. Anything more than 5 times a day, I don't know how, frankly, you can keep up with it, because there's so much going on in these markets that it's really, really difficult to do that. Now, one of the things that, if you remember the old story about if you hit 10,000 golf balls, you can play a round of golf with Tiger Woods. Well, it'd be the same thing in trading. Well, to do 10,000 trades, if you were doing 3 a week or 3 a day, it would take you about 8 years to do that. I believe I calculated it relatively quickly this morning. Someone asked me that question, so I said I think you can learn trading in a lot shorter time than 8 years. Some people, it might take that long, but usually within 2. And quit doing the wrong things. That's the main thing. If you stop doing the wrong things, that's a big thing to be doing. So make sure that you stop making the same errors over and over again, because those are the ones that really bang you up pretty badly. So that's mainly what you probably should be paying attention to. Take care of your losses. Your profits will take care of themselves. That's pretty much what we're looking at. I want to bring to your attention, folks, the euro. And by doing that, I'm going to do 2 things. I'm going to bring the 4-hour chart up on the euro, because we got down to 112.60, and then we had a nice rally here. We did take out the lows of January. We got to 112.60. That did not quite make the ABCD pattern that we're looking at, but we had a very, very important rally. And the reason why I am looking at this, and remember, I look at some of these things on a microscopic level, either that's good or bad, I'm not sure. But if we see what the dollar index did yesterday, you'll notice that this pattern that we were waiting for to complete up there at that 97 level hit it exactly, and it closed 50 pips lower. That means that the euro rallied, and you can see that ABCD pattern very clearly in the dollar index. So that was saying that, it should have closed at least sharply higher. given the fact that it broke out of those highs of the last few weeks. Now, if we do one other thing, and that is to go down to a little bit smaller time frame, let's go to a daily where we can blow it up and see it very, very clearly. If you'll notice here with the euro, what it was, this is the this is the dollar index. You'll notice the dollar index had the rally from January 7th into the 23rd. We came down into the end of January and then straight up into yesterday. We made the 78% level. You can see that mark there right on the stop. You hit it 2 days in a row, hit it Thursday and then yesterday, and it closed in the lower part of the range. That's a possibility that ABCD pattern has completed and we have a little bit of a correction. So that's why it's important, to watch this, because even though we have lower price projections on the euro, if this is an ABCD, we could have a similar correction like we had in the dollar index during the 23rd of January down to the 29th, and it dropped, 2 handles. That means that the euro could move about a handle and a half. It could get all the way up to almost 115 and still be very bearish. So that's the key to watching this, because we're at a very, very critical level in this. As you can see here in the dollar index, if we look at this on the long-term weekly basis, you'll notice that we had that head and shoulders pattern, then we had that strong day where we got up to 97. That was yesterday, and then Monday, and then we've rolled over. So this is why I believe it's so very, very important to keep a close eye on it. That's a real key one to watch. Here's another one that's on the watch list for today. If you think of sushi or something, you want to go to Japan, you'll notice that the yen here is trading at this 110.84 level. That's the 61% retracement on the whole range, and that should be some resistance, but you'll notice the 50% range only held it for a few days, and then it went right back above it. But that 61 level is pretty close to what you're looking at, and you want to watch that because of the fact that it is a 61% retracement, and that makes it incredibly more important. So that's another one that I would certainly keep a very, very close eye on. Regarding Bitcoin, folks, the Bitcoin has actually held the level that we were watching here down at that 78% level. It made a perfect Gartley. If you remember, we've said here many times that the long-term ABCD pattern in the Bitcoin from the 2010, that was 9 years ago, actually 9 years ago, that number came in at 3,800 per share, and we're trading around 36 right now, with our low being as low as 3,100 that we made, way back in December of last year. And that's, remember, it was exactly 1 year that the market went to the Chicago Mercantile Exchange to be listed. So this is what we're looking at, 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and we're going to walk through this S&P because it's been blasting through these resistance levels at will. So this is what we were looking at last week. We dropped actually 60 handles down from that 2738 level. We got down to 2680, and from that it's been straight up. And that's not unusual because this thing has been extremely bullish since that bottom that was formed, you know, way back when. Let's just look at that bottom because it was such a powerful bottom. We'll take a look at this right here. If you'll remember, well, I'm not going to go over this. You've been through it before. You got your ABCD. That CD leg was a 1.618 expansion, and also you see it hit right at the 1.618 expansion of the move from August all the way into October. It was also a 61% retracement on the low from 2016. So a lot of things were happening at that point. You notice that we've been blasting through the 61 and 78% levels easily here. The next level to look at is at 2820. That was also the high in December before the big break. That's the 78% level. I believe we're going to get there, but you know, here again, that's my assumption. It's just my sophisticated wild guess, as they say in the trade, but that's what we're looking at as we're watching it. If we take this down just a tiny bit smaller here, let's just give me 1 second here. Just a minute, I had the wrong one up. I had the NASDAQ up, and I wanted to do the S&P, and I want to make sure I do it right. I believe this is it. Yep, here we go. Here's where we are today. We've had a little bit of a pullback there. You'll see that 2680 pullback. That was nothing more than a 382 retracement of the low that we had made in late January. And this is a 4-hour chart, so it takes several days to get one of these big swings in here. You'll notice that swing that we're looking at on that ABCD, that measures to 2785. That's a heartbeat away from the 78.6. You can see that at the 2810 level. So, you know, there's nothing there that makes it. It could turn at any time. There's no question about it. But if you're going to do that, what I would do is I would go down to a 15-minute chart so that I could get an acceptable risk here. But trying to, you know, this thing is really moving quickly. I mean, it's you don't have to be a rocket scientist. I mean, folks, you know, we're looking at positions that we have in the Canadian dollar that are working, you know, really good. The hogs are working really good. I mean, and we got two others that are doing really well. I'm trying to think what they. One is the soybean meal, and what is the fourth one? I can't remember. I will remember in a little bit, and we'll see how that's going to end up. So yes, the gold made a nice 61% retracement over the last few days, just a little while ago. It's got some support there at that, but the real support, folks, in the gold, I'm really waiting for this, and I might be. Well, it might be wishful thinking, I'm not sure, but this is the one that still really has my attention, and that is this 1298 level. That's the one that I'm really looking to see if it can get down to that level, because if it can get there and not go any lower than, say, 1292 or something like that, boy, that would be extremely bullish, because you'd be back at you'd be touching those old highs from January, and not only that, you'll be the same time down that you were between January the 1st and January the 22nd. If you notice, that long consolidation at the 382 would be doing exactly the same things again. And that, boy, that would really be a really low risk buying opportunity, in my opinion. That's what you look for. In fact, that leads us to the next question that someone asked us by email last night, is what do you do when you have a period when you're doing everything wrong? Well, if you're doing everything wrong, and I mean putting in buy versus sell, and sell versus buy orders, putting in the wrong prices, all that stuff, that just means you're overworked. I mean, you just got to take a break 2, 3, 4 days a week, whichever necessary, because you're going to continue doing that until you rest. I mean, there's just no way you can be around it. But if you make an error here and there, that's not unusual. To have a bad string of trades like 6 or 7 or 8, that's not unusual also. But when that usually happens, if you take a little bit of break, a day or two, and then just come back and wait for something like what we're looking at here in gold, it might not happen. But if it happens, you've got a very good chance of winning here, because you have so many positive things, working in your favor. Another example was that hog trade, very, very similar to, what you were looking at on Monday. You had all of these ABCD patterns coming in, price and time together, 78% retracements. The market opened slightly lower for you on Monday, and it happened to work. You don't know if it's going to work or not. Nobody knows that. So you just got to keep on trucking. Like Winston Churchill said, never, never, never give up, in his most famous speech at Westminster at the heart of the dark days of London in 1939, right before WW2. All right, folks, let's move on here to one other thing that someone's asked us about, and that is the Hang Seng Index. This is very important also, because one of the things I mentioned in the newsletter is that if we had a lot of strength in the Hang Seng on Monday or Tuesday, that could be the first indication that we were going to be stronger in the U.S. stock market. And what happened was the market opened higher and immediately went up 1.5%, and we took out the highs of last Thursday. That was at 28,100. We're now trading at 28,400. That's telling you that CD leg has not completed yet, so it can go a whole lot higher. So that's the main thing to look at. So we'll see. I agree with you, Mr. Z. I think that 1331 coming soon in the gold will be coming. But, boy, let's get it down one more time. And because if we can get it there, that 12, just break 1300, because that'll get the moving average boys in. And then if it turns, you've got a really, really good risk-reward ratio on that one. It's a really important one to look at. We had a request here from one of our listeners about this chart that I posted in the newsletter showing the cycles in the Treasury notes. You'll notice that you'll see these cycles. Those are the upside down cycle things that basically from high to high. It was off by 1 week. And of course, we've been selling off now for 4 days, Friday, and 3 days this week. We are looking at lower. So this is what it appears, that we are getting ready to see something. We are seeing a correction. How much we're going to get, we don't know, but that's the first part of it. If you did that short up there near that 146.24 level, you've already made 1.5 points. So you certainly want to either take some of it off or put your stop at break even so you're at a break even trade. That's the way I would certainly handle it if I was doing that. So that's what I'm watching here. Okay, one other question that someone asked us. Oh, it's about Apple. Let's just get this up here, and you'll be able to see it. Well, it's still having a little bit of trouble here. I don't even know. I'm not even sure. I haven't checked it today. I checked it on Monday, but we hadn't taken out the 174 level. Whether we have or not, I'm not sure, because the 177 level is the key level in Apple. That's the 382 retracement back from that big drop from 205 down to, well, we dropped quite a bit, didn't we, in Apple? And now we're going to see whether we make that 382 retracement or not. Folks, the market is still rallying, but long term, it's just a matter of when this little puppy finally takes its last breath and rolls over, because I do not believe we're going to see new highs. We certainly could, and the reason for that is that a tremendous bottom that was made in that market, way back in December. This was one of the things that we were extremely important about. Now, this is the daily. You don't get to see the weekly on this one because I don't have it ready. But the daily low in that New York Stock Exchange Index was spot on 61%.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, right, folks, I posted a chart of the New York Stock Exchange Index on the weekly basis. You can see the importance of that low on December the 26th. Also, look what we have in front of us right there at the 61% retracement there in the New York Stock Exchange Index. So pay close attention to that one. I think it'll be something that would be very, very important to look at. Finally, the last thing I want to do on today's show is I want to share with you what could be a forecast today. I'll bring it up. You can take a look at it. Looking at the E-mini S&P, whether that's going to happen that way. You notice has a strong bullish bias with key times at 10:30 and 12:30 in the morning. Also, if you're involved in foreign currency at all, pay close attention to the Japanese yen. We're at some really key levels up here at this 110.80. Sometimes that runs exactly like what the stocks are doing, so that's important to pay close attention. The bonds, I believe, we were trading around 144 and change, I believe, and I believe we're going to go a little bit lower in that. We'll have to wait and see. The Canadian dollar still continues to work extremely well, so stay in that one. That trend is very strong and looks like it wants to continue. As I mentioned earlier today, we're going to have Bill Meridian of Cycles Research on Thursday. Friday, we're going to have Tim Bost of Financial Cycles Weekly. So those are all really, both of those gentlemen are extremely learned and give us great information. We'll be enjoying to talk about that, especially both of them. But Bill Meridian's going to be talking to us about the gold and also the stocks, because he's been very bullish on stocks and that has been going up. So we'll see how that works. He'll also throw in a few things on the crude oil market that he's learned too. So that's what we're watching, folks. So live every day in an attitude of gratitude, and I'm sure you're going to have a wonderful day. And may God bless. And we'll see you on the flip side tomorrow. And I know it'll be a lot of fun.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.